swayed by what happened in the last 3, 4, 5 months or even a year or 2 years. So recency bias is what we fight. So we will not go by flavor, we will go by gaps. If a client disagrees, then we counsel him. That's where that 3, 4 years is needed. New clients are not seen as revenue machines. There is something you have to work on. You have to build that relationship for 3, 4 years with data to eliminate the heart aspect as much as possible and bring more mathematics, which is the mind aspect of wealth management business. So coming to the second part, again, when RMs again get added, we are not in a hurry of how much revenue they will bring. Again, they are not my revenue machines. They are people, again, you build a relationship with an RM, build his capability, her capability, bring the same social fabric. It takes years to build that. So but the third part, will we always believe and give you a conservative guidance? That's going to be our DNA, for sure. Does it mean that I will beat the guidance is what I'm saying? No, because God also has a lot to do in the next 12 months. So, but 280 in our belief currently is something which we can put on the table, and deep down we know we are not exaggerating.
And sir, just on the first question that I had, if you could just elaborate a little bit more. So I understand that, obviously having met you and understood that our process on suggesting a particular product is obviously very scientific. But so just wanted to little bit more on the MLD. So when you guide for when you say rather if not guide that the share of MLDs would improve, what I was trying to check is that do you look that the capacities in this particular segment will move up? That's how it is a 30-35% kind of a mix from the current, if I'm not wrong, 25%. Or is it that that some of the investors do not have MLDs, which if they look to add to their portfolio, that's how the mix would move up? Or thirdly, does it naturally happen that if at all we assume that markets are going to maybe not going to be the way they have been buoyant in the last 1 year, naturally the share of MLDs move up? So I just wanted to understand that, when you say a 30-35%, what are the points that you look to highlight to assume for us that it should move 30-35%, because this will obviously take your yields also higher. So that's the last thing. Thank you.
So yes, madam. So it's not market driven, like it may not be buoyant. So the 30% number which I just said as not a guidance, as a number which was in my heart, that comes from it stems from the fact that we do a lot of realignment yearly. Or every 15 months, our model portfolio also goes through some rejig. Depending on if we had cash in our bank account, will I buy the same 13 schemes? The answer may come no. So I look at doing a full zero-based exercise of what I own in mutual funds. When you actually do that exercise, if your proportions are not as per the decided allocation, let's assume I am a client, which I am, of course, a happy one. If my proportion decided in equity mutual funds was 55-35 in structures and 10, hypothetically, or 65 in mutual funds and 35 equity mutual funds and 35 in structure products with zero debt, if this was my proportion on the beginning of the year, at the end of the year, because the 65 grew at 40-45% last year, the mark to market brings me to 72 in equity mutual funds and 28 in structure. Come May, June, if my equity mutual funds are being re-evaluated, if there is one fund which I exit, I would not buy back equity mutual funds. The 7 rupees may get reallocated to structure funds. Are you with me? So we do a one full-fledged exercise every 15 months of equity mutual. In that, if I've redeemed 3 funds, I may not buy 3 funds back. I will bring it back to 65-35. And all clients will do it at different points in time. So that's the reason why I said 30%. And this will be the large reason of realignment, which is a yearly exercise, which we do.
Very useful, sir. Thank you so much. I'm done. Thank you.
Thank you, madam, for your question.
Thank you. The next question is from the line of Yash Gandhi from Stallion. Please go ahead.
My question is answered. Thank you.
Thank you. A reminder to all participants, ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Prayesh Jain from Motilal Oswal. Please go ahead.
Yeah. Hi, good afternoon, everyone. So just a question on your guidance. So if I look at your net margin that you are disclosing, that is also similar to what you have reported in FY24. And even if I look at your realizations of the yields, both that also looks flattish. Now, both given that you have given a guidance that MLDs could go up, or not a guidance, or indicative trend, I would have assumed that the yields would have gone up. And secondly, given the scale advantage that the business has, why aren't your net margins kind of improving next year?
Sir, net margins are not improving next year because this is a guidance, point one. Point two, the business has to be understood a little more macro than the real small numbers. That's how I look at it. Rakesh sir looks at it. Jugal sir looks at it. So I'm just telling you. The business is all about making 1.2, 1.3 yield on a long-term basis. Could be 5 bits, 10 bits here or there. Don't hold me to that. And what is the net flow I'm adding? You have to project what is the revenue, what will be my AUM in 2029 March. That's my internal target. March 29, what will be my AUM? On account of a mark-to-market in the client's portfolios, on account of how much new money I bring per month, on account of how much growth in net mobilization will I have, you have to first project what will be my expected AUM in 2029 March. That's what I do. It's your choice whether you do it or not. Then you multiply that with 1.2, 1.3 or 1.4 or 1.1 depending on your assumptions on what is the revenue I'll have. 40% of that should be PBT and 30% should be my PAT. This is how we look at our business. Okay, and in that interim formative years, our business is not even a team. It is in its formative years. If I have to compare with human life, it is a 10-year-old child, not an 80-year-old child. So there will be numbers which will take us away from the macro picture. I'm just trying to bring you to the model which I look at as a professional being a part of this company for the last 12 years. Now coming to how we look at it is, we are very possessive about consistency. We don't like to have very great numbers some days for our clients. We like to bring in consistency because it's not about possibilities in life, it's about probabilities. So you would see that we are so possessive about our consistency that we would be one of the few companies in the country who would have calculated the mean result, the median result, the standard deviation of our results. And the worst year-on-year growth we have given was March 2023, 23.6% growth. And the mean is 33.8. Don't hold me to second decimal or first decimal. Median is 34. And standard deviation of our results, leaving the COVID ones, which had a base effect, so for fairness sake, I'm leaving those. Last 9 results or 8 results, which are 8 results. Standard deviation of our yearly growth is 4.8%. That's how numerical we want to be with our shareholders. So I'm not going to project an yield increase on variables which are out of our control. Then under commit over deliver will be very difficult to hold. Does it answer?
So if I just while you really spoke about a long-term targets or long-term view of the company, but from if I look at it from a FY25, FY26 perspective, now is it fair to assume that the cost that you would be incurring would be in line with your revenue growth? And I would like to understand as to what levels of cost or what elements of cost are that are getting added, or what are the level, or what are the segments you are investing in for you to kind of extrapolate the growth in expenses to be in line with the growth in revenues. That will be one bit. And second bit, is it in spite of the rising mix of amenities, we will still see a flattish yield? Is that what you're guiding for? That is a fair assumption, right?
No, I'm not guiding for. I know what is the word you're looking for, operating leverage.
Yes.
I didn't want to use this word because we like to have it unfold. Because we have given you a guidance and we've told you that this is under commit over deliver. I don't want to promise an operating leverage because जो मैंने guide किया उसको hold करना मेरे लिए बड़ा we are very positive about it. That's why I'm not speaking of operating leverage. Do I deep down believe there is some operating leverage? Yes, it is. Now that you're putting me in the corner to answer that, which I was conveniently not wanting to commit because that's what keeps us up. If we overcome it, it disturbs our sleep as professionals. That's why you don't want a new variable which you are going to be asked on. We have already given you our aspiration of trail to upfront 50-50. Now that's something which runs in our mind and in our actions on a daily basis. That's where you see trail has come up from 35 to 37%. So I already have an extra variable which I've spoken about, not guided, but we like to deliver what we speak. So that's why I don't want to give any operational efficiency ke aakade. And for an external party, upfront income could be something which is not predictable for in inverted commas. For us internally, it's as predictable as trail, or at least 80% as predictable as trail, because monies get reinvested after tax monies. Because I know, I have met clients, I am an RM myself, I know what maturities will come and will it get reinvested on the basis of the behavior of clients. And I meet 3 clients a day. So I know that upfront revenue for me is predictable. Of course, an external party will take it as a pinch of salt, saying that yaar ye kaise predictable hai, right? So we believe it's predictable, upfront revenues, and we believe, and we don't expect you to know.
And lastly, on your dividend payout, what are the thoughts in terms of overall future? How should we look at it? Should this level of payout be maintained, or is there any scope to increase it further? How do we see this?
Our dividend policy says 30 to 50%. I think we will stay in that range. Because that's...
Got it. Thank you so much, and wish you all the best.
And I actually, sorry, by mistake, dodged one of the questions. Rakesh sir beautifully answers that, and that's where he's given. Rakesh sir, hai aap?
Hello.
Hello, sir. So where are our areas of reinvestment? You generally give us a lot of guidance there. So actually there was a question saying that which are the areas of reinvesting money and not worrying about operational efficiency today? Which is a very
So my, see, like Feroz has mentioned, that we are a strong growth company, and with a 20-25% compounding, the size of the company over the next few years, 5 years, will become very large. And therefore, we have to make sure that we build strong pillars which can hold this large organization together. So therefore, for example, marketing. For example, the whole introduction of the platinum segmentation, which is 50 crores plus kind of clients. Yeah. So several of these areas are there where we have to invest money. So what we are trying to do is to maintain that 40% margin, and whatever operating leverage we get, we reinvest into the business in some of these verticals. Yeah. We will strengthen our HR far more than what it is today. Yeah. Despite having zero attrition, does our HR need strengthening? Yes, it does, and we are in the process of doing that. So internally, there are several areas that we need to strengthen so that we can have sustainable growth. Yeah? So that's why to the market we are saying, hey, don't have an expectation more than 40%.
Got that. Thank you. That's helpful. Wish you all the best.
Thank you, sir.
Thank you. The next question is from the line of Sunil Shah from SRE PMS. Please go ahead.
Yeah, thanks for the opportunity. Congratulations, Feroz, and the entire team at Anand Rathi for this super performance. Feroz, this is about the 2029, 5 years down the line, and you just stated the simplest way to look at it is, I'm audible, I hope?
Yes, Sunil sir.
Yeah. Okay. So Feroz, you just stated the best way to look at it 5 years down the line would be that we are having a growth of roughly 33% at a mean level. Am I getting that number correct in terms of the AUM growth?
No. Yeah. Last 10 years could be that. What I meant when I spoke those 33% in the context of last 9 results, our mean annual growth is 33% and the median annual growth is 34%. Because we like to have consistency for a shareholder as well, just like a client. That's the context in which I said. It was not a forward-looking statement. It was actually a backward-looking statement of the last. We've got listed in December 21. This I think is our 11th result.
Yeah. Okay. So if, I think as you stated, you have been there in the organization for like 12 years. And I believe a lot of people would also be, amongst your RMs, would be there for a good period of time. Now, maybe all that you've invested in the organization to make it very, very robust and evolve over time. So the next 5-year journey could be even better in that sense. So I'm just trying to say that if the market is compounding at, let's say, 15%, and if you are increasing your manpower strength by, similar number, then still sustaining the 30% growth rate will probably not be a challenge given that the mean growth has been at that rate. That's number one. Second is, if I extrapolate this 59,000 crores of AUM and look at in 2029, my AUM number comes to something around 250,000 crores. I'm just looking at a directional, thought process which I have. Is my thinking significantly in a wrong direction, or if you could help me to understand where I can still improve on my thought process?
No, sir, I think you're very close to our thought process, not numerically, but since we have this principle of count that asset which is yielding. Okay, so it becomes very easy for a shareholder. See, if I worked for a previous company where anything and everything can be counted as AUM. So how does a shareholder decide whether this will give me 1.3 yield? In Anand Rathi, we are a gatekeeper. We bring those clients and those assets which marry our thought process. If somebody, if my cousin said, I've sold my business, I'm giving you 800 crores of arbitrage fund, I'd say, I don't want this, brother. So we are a gatekeeper of bringing long-term assets. So the thought process is, जो assets हैं, उस पे आप yield कमाएंगे. जहां आपका हक नहीं बनता वहां नहीं कमाएंगे, जहां आपका हक बनता है वहां नहीं छोड़ेंगे. This is our mantra with our clients also. Right? We don't give mutual fund by discount to lure somebody to start. So coming back, yes, you should project an AUM. I think you should project an AUM conservatively. So the number which you had in mind was larger than my number, because it's always good, because your good times don't need preparation. Right? So you should always have a little conservative approach on that, and then multiplying it with revenue, then with PAT, PBT and PAT. I think that's and like you rightly said, I've finished 12 years, but I'm still the most representative on this call. Rakesh sir has finished 17 years on 1st April 2007 is when he joined. He's one of the longest standing CEOs. And change in management was the reason why this is my third job. Unfortunately, it could have been my first job. I left the company because the promoters changed. AB and Amro was sold. So point I'm trying to make is, I'm still the junior most. Jugalji has spent 30 years in this brand. And I have spent 12. Of course, Vishalji makes me look pretty by having only spent 5 years, because he's a young man.
Yeah. More importantly, I think the way in which the culture is getting built up in terms of the new RMs, which will then carry on the legacy for even longer period of time. So that's really a great thing to do. Again, coming back to the number bit which I was talking about. So once the AUM number is arrived at 5 years down the line, the simplest way to do it is 1.2% of the AUM as my top line revenue estimate, and arrive at a 30% bottom line estimate of the top line which I arrive at. That would be the way to go about, right?
Oh, okay, you're almost cornering me. Similar, I would say.
Whatever the AUM number is, whether it's 2 lakh crores or 2,50,000 crores, for me to just have some number in my mind, the best way to look at it is 1.2%, even if it's not 1.3% as the current number is. 1.2% will be my top line, and 30% of that will be my bottom line. That's directionally the right way to think.
Yes. Yes, you are in the right direction, sir, and that's how I would look at it as well, if I were supposed to be looking at it. And when Rakesh sir has said, and since he is the head of the pack and we are foot soldiers, when he says 20-25% growth for decades, now you have to see, you would not say it if he doesn't mean it. And I think after 23 years in the industry, after having worked in FMCG, he understands the industry enough. And when he says 20-25% long-term guidance compounded, will there be years more than that? There will be years more than that. And that's how the last 2 years have panned out. And you're building a business which is market agnostic, unlike most people's belief. They think financial services market ke momentum pe chalega. भाई लास्ट 11 क्वार्टर में क्या क्या नहीं हुआ। यूक्रेन की वॉर हो गई, 15,200 पे चली गई। एचडीएफसी का मर्जर हो गया, वापस 18 पे आ गई। वापस जून में इन्फ्लेशन बढ़ गया, वापस 15,200 पे गई। इन ऑल दिस, हाउ डिड द क्वार्टरली रिजल्ट्स कम आउट रीजनेबली कंसिस्टेंट? That's the point to ponder upon for analysts, which they will just paint everything in the same brush. Financial services market अच्छी चल गए. One guy said this to me. I said 2 years, please see, market has touched 18,000 4 times and 15,000 4 times. But look at the quarterly result. Last quarter was not the great market sentiment. After December, things changed, but my net mobilization was good. So we are trying to build a market agnostic, logical finance company, and sales is an outcome. This is what is our internal aspiration.
Right. So market will do what it has to do, which is unfortunately or fortunately not in either one of us hands. The important thing would be to build a team of RMs, which will be completely, in your hands, and create that culture. So we are looking at growing our RM base by at least a 10% kind of a thing on a sustainable basis year on year for the next 5 years, because 15% is what market will give me. For my 25% growth, the 10% RM push has to be there. So that's a conservative thing to look at. 10% growth in RM base year on year for the next 5 years.
So there's actually, how we look at it is, there are 4 mutually exclusive variables of growth. We said this in the first result. Of course, there is now some degree of credibility. There's Rakesh sir. Rakesh sir, you want to speak of those 4 legs of growth? The more.
I can try.
Yes, please.
As Feroz mentioned, that the first leg of growth is the portfolios giving return, which is market dependent, but there are other factors as well as alpha and so on and so forth. So that we expect, long term, 5 years, 12, 13, 14% kind of growth coming from that variable. Then we have our, existing, clients who are not fully with us. There are several clients where part of the book is with us, and therefore by showing them performance and with building the relationship, we have been drawing their assets from other, wherever they are kept, including real estate, onto financial assets, as well as other advisors through a series of processes of audit and so on and so forth. That will continue. That will add to my growth, which is existing clients, money is outside. Then we have new clients coming in and they're starting with whatever they are starting. That will be a third vertical of growth. And the fourth vertical of growth is adding new RMs to the kitty. Yeah. So as you said in the beginning, there is market growth plus RMs bringing in money, but there are 2 additional factors which also bring in business, and that will add to. So when you add all this, is it likely to be more than 20-25%? Well, we think it is likely to be. Is it something which is an opportunity for 1 year or 2 years? No, I believe there's an opportunity for several multiple years. And that's why we are saying that there is a very, very high probability of this business growing at 20-25% for a very, very long period of time. That's the way at least we look at it.
Absolutely. Fine. Thanks, sir. Thanks for this wonderful explanation. Thanks, Feroz. Thanks the entire team. Please continue the great work. Thank you so much.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question of the question and answer session. I would now like to hand the conference over to the management for closing comments.
I'd like to thank everyone for being a part of this call. We hope we have tried to answer your questions. If you need more information, please feel free to contact Vishal Sir Sanghavi, our Investor Relations Head, or Rajesh Bhutraji, our CFO. Thank you so much for your time and patience. Thank you, Rakesh Sir, Jugalji, Rajesh Sir, Vishal Sir. Thank you.
Thank you, everyone. Thank you, Feroz. Thank you, Jugalji.
Thank you. On behalf of Anand Rathi Wealth Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.